And as you can see, almost instantaneous profit. And then there you go. Hey guys, what's up? Brandon here. What I did in this video is something that a lot of people have been requesting for me to do. So I really hope that you sit down and you enjoy the entire video and you pay attention to everything that I have done, and I will see you in the content. Alright guys, so today we're going to be taking a look at USDCAD, and we're going to be doing an analysis on USDCAD. Now, this is the replay function that I am using, so that's the disclaimer. Alright, this is past structure that would have happened before, and I am going to be playing it forward. But I am going to be doing it in a manner that at least breaks down what you can do. Now, I don't typically analyze like this, but this is something that I do tend to try to teach people how to do, how to be constructive in your reasoning. All right. Now, with UCAD, right, the first thing you want to do is you have to identify, obviously, this is not just on UCAD, by the way. With any currency pair or any asset class, you have to identify the overall direction. Very, very important. Identify the direction. And how do you identify the direction? You can literally just eyeball it. You can literally just look at it. Now, looking at it on the 50-minute time frame isn't going to give you enough data. As you can see here, it's not giving you enough data. It's actually giving you a false direction. So what a lot of people tend to do is, if I tell them to only stay on the 50-minute time frame, they might be fooled by this. But there are ways around this as well, and I'll show you this in another video. But when you're looking at, if you're trying to do an in-depth analysis per se, you really want to try to see if you can figure out the overall direction. And when I say overall, I mean overall, right? So the best way to do that, obviously, is to go up on higher time frames, right? To get around getting a false direction. So what I'm going to do today is I'm going to go all the way up to the monthly, and I'm going to work my way back, but I'm going to show you what you can do when you get up to the monthly to give you a better idea of the overall direction. What a lot of people, I'll tell you what a lot of people do as well, is when they get up to the monthly, they just draw a trend line and that's it. What I do is when I go up to the monthly, I'm actually trying to identify some areas that have something interesting to me. So I'm looking at all the way back to 2011, right? And I'm looking at the fact that UCAD has been overall bullish, right? Now that's something very important. So what I can do, I can actually circle and highlight areas where I'm seeing big reactions in the market, right? So I'm doing this for all of these areas, right? So this one is one, this is one, this is one, right? This is one. Big reactions. I'm looking at areas where I'm seeing a lot of price has come to this area and then reacted really aggressively, right? A lot of people don't do this, right? So what I can even do when I realize that price has reacted to the same area more than once, I can even draw a little area. I can put a little thing like that. I say, all right, nice, good. That's something that we can use. Now, very, very important. This is not a support, right? This is not a support. I can also take this and say, right, good. We have this as well. This is not a resistance. The only reason we are putting this on the chart, and this is very important, is because we want to see how price reacts to this area, right? It's not a break and retest. It's not a support. It's not a resistance. It's nothing of the sort. We just want to see what price is doing in and around these areas. So now that I have all of these different highlighted areas highlighted, I can change my time frame. I'm going down now. So I'm going on the weekly now. So on the weekly, I can stay zoomed out and I'm going to see the same price action. But what I really want to take into consideration is really and truly the start of this year, right? So we are in July now. I really want to pay attention to the start of this year, and you can actually see that it's somewhat bearish, right? It's somewhat bearish, but it reacted to this area at the low, right? So yes, it's somewhat bearish, but it reacted to this area at the low, and once it got to this area, it never came back. And from this area, it actually even started to move in a somewhat bull direction. Now, this is why we say that, excuse me, bear and bull trends, yes, they have their place, but really and truly, if you're only relying on these bear and bull trends, like I would have discussed on the last video that I posted on this channel, If you're only relying on these things, you would still lose because that's not enough information to pay attention to. What I'm looking at here is the fact that it's not necessarily the cleanest bull trend, but it is definitely in bull momentum. And you can see that is clear because of the fact that right in this area, you can see reactions, 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 and reactions, right? So that's what's happening on the weekly time frame. And each of these areas is creating higher highs and higher lows. This is the only one that would have created, this is the only one that would have created a similar lower high, right? So you can actually now put this as a area as well, right? So you realize now I'm using deductive reasoning, right? So I'm looking at the fact that, okay, overall it's bearish, but it never came back to this area. It's not a support. I'm using momentum and reactions and wicks and all of these different things in tandem with each other to make and formulate a bias or a directional bias, right? So I now know that it had problems last week to get back to this area as well. So now I can go down on the daily. Looking on the daily now, you're seeing it again. Now it broke this trend as we are saying, but the interesting thing is, again, we cannot just adhere to the trend. We cannot just adhere to the trend. We're looking at the fact that USDCAD overall recently had literal problems getting back to this area, right? So we're saying, all right, good. That's good news, right? Or that's something good to pay attention to. So now what I'm looking at is I'm looking at all of these areas here, right? And I'm saying this is an area, right? So you could actually circle it again. You could say that this is an area, this is an area, this is an area, right? This is an area. Is there a bear trend? Maybe there is, right? Interestingly enough, there is. So it is a bear trend, right? So I'm going to make this drawing a little less scrappy, right? And you have these little areas here now on the bear trend that are actually making this thing something somewhat interesting. So I'm saying all of these are areas now within the bear trend. So I'm saying, right, nice. That looks pretty good. That looks interesting enough that, maybe, just maybe, this is something to pay attention to. So it looks like a bear trend. In other words, if it comes back and taps the bear trend, then it may just try to come back to this area. Maybe it might, maybe it might not. You don't just try to jump into the market when you see things like this, however, right? So the next thing I'm doing is I'm going down to the 4 hour. And on the 4 hour time frame, I'm realizing that there's actually some bull momentum coming back. So now I'm starting to pay attention to the individual candles, right? So you see all of this bear momentum coming in here, right? At the low, all of this bear momentum coming in here. You have decreasing bear momentum by virtue of the candle decreasing in size. And then you can see increasing bull momentum, not only with the size of the bull candles, but with the wicks being thrown to the downside. So I can also put a little circle right here. And I could put a little zone right here, right? Remembering that my overall bias is buys. Remember, if it is we go up to the biggest possible time frame, my overall bias is still buys, right? So we're going down again. So we're on the 4 hour time frame now. Now we can start to look at individual candlesticks. We're on the 1 hour time frame now. On the 1 hour time frame, you actually start to see it even better, where you have the momentum is actually increasing for the bull direction, and it is decreasing for the bear direction on multiple levels. So I'm going to remove all of these drawings. The only reason I'm removing them is because we already know what it is we're looking for. The reason why you might have these drawings in the first place is just to kind of give you something to kind of work with, right? So I'm looking at all of this. I'm saying, all right, good, right? I am looking at the fact that 1, 2, 3. So from this area, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bull candles. You have 1, 2, 3, 4, 5, 6, 7, 8 bear candles. And if we were to look at the bear candles in relation to the bull candles in terms of sheer size, which do you think is actually more prevalent here? It's actually starting to go bullish. The bull candles are actually taking over. So we're on the 1 hour time frame and we're trying to prioritize what is happening. You could look at your individual rejections to the lows, right? You have this one, you have this one, you have this one, these two here, right? Now this is a little alarming. So I have to pay attention to what's going on here, right? But I'm only going to do that when I get to the lower time frame. I'm not going to pay attention or heavy attention to it right now. So I'm going to go down on a lower time frame now. On the 30-minute time frame now, guess what? We have the same thing that we just saw, where you was actually seeing that bear, that black candle was actually looking like it was bearish and it closed like that. But you can see that now the bear candle again, the next candle, which is this candle here, is actually looking like it wants to push up. So I'm interested in why is that the case? Is it showing signs of bull momentum still increasing, or what's happening? So I'm not going to draw any new circles or zones or anything in this area. And listen, let me make something clear. The only reason we're drawing circles and zones is to identify areas where we should be looking for clues about what it is we are doing, right? As the only reason. These circles and zones they don't mean support. I need to make this clear. They don't mean support. They don't mean resistance. They don't mean supply. They don't mean demand. This is literal deductive reasoning here, right? So I'm looking at all of this here and I'm saying, all right, so it still looks to be very much bullish, right? So let me play one candle, and this one candle is coming back into the zone again. That's interesting, right? So you know what? Let me play one more. So now in a case like this, in a live setting, I would wait. I would not change my time frame. I wouldn't do anything. I would wait because I want to see how price reacts to this area down here. I want to see, right? So I'll play one more candle, and that's something interesting. So now it looks like after all of this bear momentum, it looks like the dealer is creating something that might be looking like a W pattern, right? Definitely not the cleanest. So you have this first low, and then you have maybe this second low, and maybe something like that. So I don't know. I don't know. So what we will have to do in this case is obviously we will need to wait, and we will need to let one more candle play out. Let's see. One more candle. That's good. That's a good sign. That's a very good sign, because what it is actually possibly confirming my W pattern, which is also confirming my reversal, which is also confirming more possibility for buys. So what we can do now is we can go down on the lower time frame, which is the 50-minute time frame, and you can see that maybe the W is indeed active here. Now, what I will make sure that you understand is I'll be very careful, very, very careful to just randomly buy down here too soon. Because what could actually end up happening is it could be that this here is the new low. So let me remove all of this. Let me remove this. Let me remove this. Let me remove this. And I remember, again, the only reason I'm removing them is because I want to clear up the chart, right? The only reason we're putting them there is to kind of get an idea as to what it is we should be looking for, where we should be looking. But looking at that, you would have realized that it may have broke this low. So what I could do is, again, I'm removing this zone, and I might decide to put, let me just adjust the chart here. I might decide to put a zone at this low to see what happens, right? Maybe, just maybe, because I want to see maybe if it could come back to this low, right? Like this, to actually create the W that we want, a cleaner W, because let's be honest, this one is definitely not the cleanest, right? So what I'm saying now is I'm saying maybe, just maybe, that could happen. But I'm not going to just, I'm not just going to say that. I need to wait to see. So two things could happen. It could actually start to present a buy right from this moment, or it could actually start to push back down to create that that second leg at a W, which is possible, right? There you go. Interesting, right? This is very, very strong. Very, very strong. So in a case like this now, you realize now that this W here, if you just try to buy, so if it is you were looking to just try to buy here, this move would have taken you out. This is why we're using deductive reasoning in the first place. So if I'm being honest, now that I'm looking at this here, now I can go down on the lower time frame again. And by going down on the lower time frame, this is where it gets really fun or really interesting. You could see a W much more clear here, just like this. So it looks much more clear. All right. And then we're going on the 1 minute time frame to find the entry. And we're going to use a bullish ECR on the 1 minute time frame. Anybody who knows what the ECR is, we wait for the cross of the EMAs. Right. And so you can see it's still not getting back to this low. So that's a good sign. You can actually see some wick rejections to the low. All right. Still not getting back. There you go. Now all we need is a red candle to reject. Let's see. That's maybe not the best. So because that's a bearish engulfing, so maybe not the best. There you go. You see why it's not the best? Because if I were to buy this, I run the risk of this happening, right? Not the best, not the best, not the best. I'm waiting. This does not scare me. That's it. That's my entry candle. You realize I waited to see how it closed. This is my entry candle right here. 10 pip stop loss. Let's see. So let me just go settings. Settings. 10 pip stop loss. So that would be 100 here, 100 ticks. Right? And just for example purposes, let me come back to the 15-minute time frame just quickly, just to show you where my first target, my first real target is, right? My first real target is this area here. Just a little past it. Why? Because there are a lot of trapped liquidity in this area. There's a lot of trapped liquidity by virtue of sellers selling, thinking that it sells. And their stop losses would be right above this area. So for me, I'm going back on the 1 minute time frame just to see what it does. And let's see. Let's play it now to see if I'm stopped out or if I'm allowed to stay in a position. And as you can see, almost instantaneous profit. Almost instantaneous profit. And then there you go. There you go. Absolutely beautiful. Absolutely beautiful. This is what trading should look like. You're paying attention to all of the details around you, right? Only when you're doing that is when you can say that, yes, you're trading. You see, the mistake that a lot of people make is because what they do is they just decide, well, they see something that looks pretty strong or looks pretty good, and they say, yeah, this is the best thing that you could use, and they decide to enter based on that information. And while I don't want to say that anything is, inherently wrong with it, it's definitely not the best approach. It's not the best approach. In actuality, the more things you have to confirm your bias, your analysis, and your entry, the better and the stronger your trade is going to be. The easier you're going to find it to make profit. You understand? But if you're not using deductive reasoning by virtue of looking at all of the details around you, if you're not doing that, it don't matter what you do. It don't matter what you do. So let's go. So let's pause this. Let's go on a higher time frame very quickly. Right? So you could play a little faster. Right? Just play it a little faster to see. And look at that. That is absolutely beautiful. That is absolutely beautiful. So it's coming back. Maybe it's going to take me out. Nor do I care. That's the whole thing. There you go. Beautiful. My target has been hit. That is a target of about 100 pips. There you go. And that is a 1 to 10 risk to reward in a matter of less than a day. Right? As you know, between this perforated line and this perforated line is a day. This distance is about the same. In less than a day's time, you could have taken a trade like this that would have yielded about 100 pips for you. And let's just play it out completely to see how far it really goes. Let's just see. So let me speed it up again. Let me double the speed here. See how far it really goes. So from your entry, there you go. That is absolutely beautiful. That is beautiful. And if you can't appreciate a trade like this, if you can't appreciate an analysis like this, it's because you're probably not doing it, right? But if you really understand what I just did here, this trade actively would be floating at it would have gotten to well over 550 pips. It would be floating. So let me go real time now, right? Let's go real time. It would be floating at well over, because it's right here, it would be floating at well over 490 pips. That's how you should do it, my friends. That is how you should do it. If you realize that trade never came back to my entry. Never. That's how you should do it. So I really hope that this made some sense to you and you learned something, you grabbed something from this. I hope that, you really kind of use this in your own analysis. And this is how you should do MTA or multiple time frame analysis. Like I said, I don't do this because typically I don't need to go through all of this to identify the original direction. But if I can't find it on, say, the 15-minute time frame, I might go out just to, make sure I'm getting the correct information about what it is I'm looking at. But generally speaking, this is what I do in my mind, and I do this 10 times faster than I just showed you here. It took me probably well over almost 20 minutes to explain this to you. I would have done this exact breakdown in less than 5, right? But when you know exactly what you're looking for, trust me, it is very easy to identify what it is you're looking at. Yeah? So if you like this kind of content and you want to see more, you want to see me break down things like this, currency pairs and asset classes like this again, be sure to hit subscribe and like this video if it is you did like it. I really hope that you watched it out to the end. And yeah, if you feel like you have anything to say or you feel like anything is bothering you about what I did, be sure to leave it in the comments below, or you can contact me directly at EkataTrading on Telegram, Instagram, YouTube, or TikTok, or you can email me with the link in this description. Other than that, I will see you all in the next one. Peace out, guys.